This one strategy can make you profitable overnight. What is this strategy? So look, in simple terms, it's pretty much smart money trading, whatever you want to call it, right? So look, this is what my strategy looks like. Liquidity sweep, I look for the liquidity sweep, right? And then I look for the breaker structure, and then that's my entry. Now, after that, confluences. What are confluences? Confluences are basically things that give you confidence. You hear the confidence. They give you confidence that the trade is going to go in the direction that you predicted it to go, right? So that's what confluences are in short. But FVG, that stands for fair value gap order block, OB. And then we also have invalid fair value gap, and then equilibrium as well. And I'll show you guys all what these look like on the chart in a second. But then what? How can you use them? So look, let's dive into the chart for a little bit and see how we can make this work. So first off, this is called Forex Factory. It's a website you can use to see what news is going on in the day that might be important for the trading day, to make sure that you don't get caught in a fluctuating market, right? This is how I see it. Yellow means it's going to be a pretty chill day, nothing too crazy. Orange, a little bit higher, be cautious. Red, I'm probably not trading. So if you look at my TikTok video, Dante Wilkerson, same as this, Dante Trades on TikTok, you'll see that I didn't take a trade today. It's being 9/15/2025. I didn't take a trade today. It wasn't because of this, but it was just very slow, right? So let's go in here. So what was the first thing that we saw? Liquidity sweep, breaker structure. Now, if you're watching this video, you should really know what a liquidity sweep is and the breaker structure, but if you don't, let's just dive in here. So basically, a liquidity sweep is, and we all have our own meanings. So if you see another video saying, oh, this is a liquidity sweep, oh no, this is a liquidity sweep, you just have to go what works for you the best, because everyone looks at the market pretty different. But like something like this would be a liquidity sweep, right? So you see move down, move up, lower low, that would be a sweep, right? That's a liquidity sweep. So what would I do? I would go ahead and mark that out or whatever. See, that wick is swept below, it went back up whichever way, and it swept that liquidity. It went to a lower price that it hasn't been in a while. Also here, if you look right here, we have another move down, move back up, that creates a low, right? And it's another liquidity sweep right there, right? But in this case, you don't need really two liquidity sweeps. There can be a situation where some liquidity sweep isn't as valid as the next, depending on price action and what the market is looking like. This liquidity sweep and this liquidity sweep right here, since they're so close, you'd probably want to go with the lowest one because it's probably more valuable for a confluence, right? So go ahead and pause this video if you need to, open TradingView and mark out 5 liquidity sweeps, right? Take your time or whatever. All right, now you should have unpaused the video by now or whatever. So what was the next one, right? Breaker structure. Breaker structure, like I said before, we all have our own ideas of what the market looks like to us. Everyone has their own ideas, so your breaker structure is going to be different from my breaker structure. It should all be around the same. It shouldn't be that confusing. But let's look for a breaker structure, right? Right, found one. So right here, mark this out. This candlestick right here, let's go here. This is a move up and a move down. Now, a high and a low, to me, a high would be a move up and then a move down. And then a low would be a move down, then a move up. And then from that, I'll take the highest or lowest wick from each of those candles, and that's my low or high, right? So that's what it looks like for me. So knowing that that's the high right here, right? I'm looking for something, a candlestick, to close above this. So once a candlestick, such as this one, closes above this high right here, right? That gives me confidence to know that my trade may go in the right direction, the direction that I predicted it to be, right? So at here, like I said, liquidity sweep, which we could get here. We could, let's see, get here. Well, let me see. It pretty much did, whatever. It was definitely a lower point since all this sector right here, right? It was lower than it has been throughout that day, these 2 days or whatever. So liquidity sweep, you see this breaker structure, right? After this closes, I enter. Now, why I say closes is because you don't know if the price is going to go up or down and actually break structure. It only breaks structure when it closes above that wick, right? This wick, it has to close above this wick. If it doesn't close above this wick, right? If it doesn't close above this wick, it's not a breaker structure. See this candle, even though it was a pretty big candle and it went back up to this candle's height pretty much of the body size, it didn't close above this wick. So it's not a breaker structure. I wouldn't be able to enter off this closure. You see how this price went back down? If I would have entered, obviously my stop loss wouldn't be here this low, but probably be down here, right? But still, why would you take the chance, right? So get in at that closure right there. Stop loss down here somewhere. Let's just do it for the fun of it, right? Closure, stop loss would be right there. This is an order block as well, which we'll go into a little later. But this would be the order block, like this. We'll just mark it out so you can actually see. But we'll go over it in a second, right? So right, there's my order block, and it went back up to this order block. So that gives me even another confluence to know that I'm doing the right trade. So my stop loss would be at the bottom of that order block, right? And what do we see from this move? You see green, right? You go up here, you see a lot of green, right? But obviously we're not shooting for the stars, not on one trade, right? But my stop loss would be, my take profit would definitely be right here, at least. So let's get this out of here. So now you know what a break structure looks like, liquidity sweep. Now let's get these out of here. Now what was the other one, right? Confluences. We have a fair value gap. Let's see. So I'm going to show you what a fair value gap looks like in short. So a fair value gap is basically you taking, to me it's it is a 3 candlestick pattern, right? So look, you see how we had this move down, another move down, another move down, right? And it created this space where the wicks of the candles didn't go, right? The wicks weren't there, they weren't present. You see how this wicked here and here, and it pretty much overlaps. The wicks, there's no space in between this candle, right? Here, there is space. So what would I do? That would be my fair value gap. So this is now my fair value gap. Now with a fair value gap, you're pretty much looking for price to go back to that fair value gap. And what did it do right here? It went down a little bit more, and it went back up, right? Because it's supposed to, with it being a confluence, it's supposed to respect the fair value gap. It made it, so it's supposed to respect it if it's true, if it's a real fair value gap. Now that's when an invalid fair value gap comes in later. I'll tell you about and I'll show you, which is going to be the opposite. But go ahead, take 10 minutes, pause the video if you need to, mark out a few fair value gaps on the chart, and you'll see what it looks like. But also, I'll give you another one. It doesn't have to be the same color candlesticks. Candlestick like these, it doesn't matter, right? We have another one right here, another fair value gap. It's a gap, 1, 2, 3. 3 candlesticks, space in between, and what did it do? It went up, right? Went up all the way up here, whatever. It came back down, respected it, went back down. Same thing, right? So go ahead, pause the video if you need to, take some time, and then I'll show you what a invalid fair value gap looks like. All right, now you should have took that time to see if you could find any fair value gaps. So really, I didn't really need to delete anything, but forgot how to get it back. So it is what it is. But basically, invalid fair value gap is exactly what it sounds like. It's just if it didn't respect the fair value gap. If it goes the other way, then it didn't respect it, right? So you see how this made the fair value gap? It disrespected it, right? Because it was in the uptrend. It went up, it went down to the fair value gap, and it was supposed to go back up, but it didn't, making it a reversal, right? So that means it's invalid, which is you can still trade with those. They're still tradable, but you you need to see the confirmation to see which way it's gonna go. See how it closed below here? That pretty much made it invalid. Now remember, these confluences aren't to be used by themselves. They're confluences for a reason. You're supposed to use them as a whole. That's why in the Miro you see 4 different confluences right here, including liquidity sweep and breaker structure, right? Because you're supposed to have them as a whole. With one of them, you're not going to be able to make a trade. So don't go out and just use one of these saying, oh, I've got the golden strategy. No, you have to use all of these. So what's next? You pretty much get the gist of it right there. So let's see. We have equilibrium. Equilibrium. What is equilibrium? In short, equilibrium is basically when you take a swing high to a swing low, or a swing low to a swing high, right? So let's see if we can find the example. Yeah, I guess we can use this. This is a nice little point. So move down, move up, move up, move down. All right, so this made an equilibrium. So what the equilibrium is, pretty much, you're basically looking for price to, after you get that, you mark it out with the swing low to the swing high, or whichever way. If you're in the uptrend, it's the opposite. If you're in the downtrend, use it the other way, right? You're basically looking for price to come back to this middle line, right? So you see how it came back right here, and it went here, right? And then it came back up. If this was a trade that I would have took, which I wouldn't have, because it's not going up, right? We're in the downtrend right here. This little section, we're in the downtrend, so I wouldn't have took this trade. But per se, if it was to go up, if I was to have another confluence for me to feel comfortable taking this trade, I would take it, right? Because it would have probably went up, noticing that it went down below this equilibrium, this middle line. You can also put a little line here if you want, and then get rid of the box, whatever, right? So that's the equilibrium. That's what it pretty much looks like. Now, let's see if we can piece all these together and show you what a trade would look like. I don't have anything on hand, but let's just see if we can find the trade that I probably would have taken, right? That looks pretty nice. I don't know. Let's see. Nasdaq ever since Powell spoke, bro. Nasdaq ripped, and then it's been chilling pretty heavy. Here we go, maybe. Let's look for the liquidity sweep. Alright, let's see. So we'll just use this. So we get a liquidity sweep right here. Let's see if we can even use this. We can. It's just it won't break structure for a while. So we get the liquidity sweep right here. Let's see if we can write it out. I don't know what color this is gonna be. Perfect. Well, it looks like a raindrop. Oh, it's still going. That's crazy, bro. So we get that liquidity sweep. Breaker structure we don't get until move up, move down. We don't get it until right here, up here. But I wouldn't mark that. I would mark literally this. You mark that out. Now that's our breaker structure right there. So I wouldn't have entered. You would have just had to. Actually, I'm tripping. Breaker structure would be right here. Sorry. Let's just move this. This would be our breaker structure. I completely forgot about this. I didn't see it. This would be our breaker structure, and I would enter off of this candlestick, right? So I said liquidity sweep down there, right? I couldn't enter yet. Then we get the breaker structure. So let's just go ahead and add that right there. I'm entering. Now low, I would probably, honestly, right here. I usually use, there's an order block there, which I don't think I showed you guys what order blocks are. But basically, order block is a big move down. The last candle before a big move down or a big move up, either way, right? So this candle right here, it could be candles as well, but this candle right here, it would be the order block. This to this, and I think you saw me earlier in the video where I spread it out, the little rectangle. You get that little tool and you make it, that's your order block, right? So usually my stop loss is around the order block. Maybe I'll double layer the order block to make it the same size again, and then that'll be my stop loss depending on how much I'm risking, right? So let's just say we put it there, could be here, right? From there, I am looking at definitely this take profit mark. Probably would have put it there, and then also up here, right? But I would have marked out first take profit right there. That's a nice little trade. And then second TP up here, right? You feel me? Leaving a little moon bag. Now, what confluences did we get in here? Like I said, order block was right here. So that knows if we were to start heading back into this area, it'd probably be a danger zone. What else do we have? Fair value gap. You see a fair value gap right here. Just to let you know that it's going to continue up, right? Look at that. It don't get no better, right? It literally respected that fair value gap so well. It literally took a nice little banana split in it, and look at it, curved right back up. Nice little curve. I ain't gonna lie, that's beautiful. But anyway, see, I get that fair value gap, also that order block. I'm chilling, right? So that's all for today. If you guys want more videos like this, where you can learn something and actually watch me trade live a little bit further down the road, this is the first video, so just gotta stay tuned for more. Setup's gonna get better. Good stuff coming in the next couple days, next couple months, years. Just gotta stay tuned. But if you are interested in learning about trading or how to trade, just go ahead, click that subscribe button, and I'll see you guys later.